Welcome, everybody, to the Chinchilla Pickin' Podcast. It is March the 24th, 2022. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am here with Brandon Beaver. Brandon, how are you, man?
I'm great. How about you?
Well, I've been better. I'm struggling with my weight loss right now. I posted a quick story to Chinchilla Pickin' Instagram. I was at the gym. I was like, hey, guys, I'm here doing what I said I would do. You guys keep doing what you say you would do, and we'll get somewhere together. Apparently, I'm not getting to the weight loss, but I'm there at the gym. I'm changing eating habits slowly. So we're getting there step by step. It's a journey, not a sprint. So marathon, not a sprint, right?
Exactly.
Other than that, man, just kind of cruising through the day. A lot of news happening, a lot of things happening in 1 week span since our last podcast. I mean, we could pretty much throw a dart at any of these news stories and talk for about 45 minutes about. So there's so much to cover. So many things have happened. It's crazy, isn't it?
Yeah. We went from CNBC last week. The world was ending and fire was raining from the sky. And then today, Jim Cramer says the bear market's over. So
right,
all year and 1 week again.
I even saw a headline today that Ukraine's taken back land from Russia in the war there. So a lot of different headlines. So, all right. Well, before we get into it, I just want to say, guys, if you are listening to us right now and you enjoy the show, please go ahead and hit that subscribe button underneath whatever podcast streaming service you're using, whether it's Spotify, Apple Podcasts, Good Pods, Anchor FM, whatever it is. Go ahead and hit that subscribe button. That way you get email alerts whenever we release another podcast, because some of our information is time sensitive. Other than that, write a review. If you enjoy it, please write a review. Let someone else know about it, why you enjoy it. Let us know. DM us. Contact us. Email Brandon Beaver at chinchillapickin.com. Let him know personally why you enjoy his insights and research. I know he reads that email every day. So please send that out. the rules of the show are simple, guys. There's just two of us here. The rules. We get together 5 to 10 minutes before the show begins, and we tell each other what we're going to talk about. We do not discuss it. We get a live discussion back and forth. Sometimes we argue, sometimes we don't. Here on the show today, I'm going to go ahead and go first. I got some quick things to point out, and then Brandon's got a big meat of the show, if you will. Big steak there in the middle. I got little sides. I got some broccoli here on the sides.
That's gross rabbit food.
Right? Well, I need it for my diet. First off, I want to talk about, guys, it's a long-term position I've had and I still hold, and I still believe in this company in this future, and it's KULR Technology Group. They announced today that they have 2 different contracts that have been signed, sealed, and now will be going into effect with the government and their military institutions. And this is something I called. I said, they're going to start getting government contracts. They had the Air Force general appointed to their board of directors, and then all of a sudden, about a month later, they got their first government contract, and now they got 2 more government contracts. I said this company is just going to be moving in that direction. And with all the advancements in EV and batteries, and this is what you're going to see is a company like this take advantage of it and create better, safer lithium-ion batteries. That is what they do. They make it better, safer. They keep it cooler, hence the name KULR Technologies. They stop the batteries from overheating. It's amazing what they can do, and everybody's going to need their technology. They're signing contracts now. The thing is, you're not seeing them in the earnings yet, because the earnings, the last reported earnings were for Q4 of last year. They were just signing contracts Q4 of last year. So I wasn't expecting to see any kind of revenue coming in, even though they did have just $500,000 from Boeing, or it was Lockheed Martin. $500,000 from Lockheed Martin come in. So that was a first advance payment from them. That's one of many to come for this company. It's a smaller company. They don't have a lot of people because they're a technology company. They're selling the technology. They're selling the rights to use what they own. And this is a big endeavor for them, and they continue to grow. And I continue to believe in them. Right now they're priced at 240. Last I checked, they're going to go over 3. It's a good time to buy and get in, especially if you're long like me. I'm very long on this company. I'm not looking for a short-term play on this. Any thoughts before I move on to the next one, Brandon?
They're making the right moves. They got the contracts with the right companies, and they're really getting big in the industry. So
Yeah, and last time when I went into their numbers a little bit, you like the debt to assets ratio there, and I thought that was a really good selling point too of them. The fundamentals are strong. The fundamentals are strong with this one. Right? Some of you might get that joke, some of you might not. The next one I want to talk about was Nvidia. I'm holding right now. I'm long on this company. I bought back in around 220, 230 after I had sold previously at about a little bit above 300. I took a lot of profit. I mean, I made a lot of profit off that company. I kept a small position in. It dropped back down. I went back in again. Had to. Great company, solid company. It's on its way moving back up. They have a lot of growth happening. High growth company. They're growing as fast as pretty much you would expect out of a startup, and not someone that's been in the business for as long as they have. But it's just the way the market's moving. Everybody needs these chips and these semiconductors. Again, this is another one I'm long on right now. Unless it breaks 300 again, I might be tempted to go ahead and get rid of my position and just keep it a little bit on the table there. Thoughts on Nvidia, Brandon, or did you want to take that Nvidia and transition into what you have?
I think it's a long hold for sure. I watched a little bit of their investor conference the other day. I didn't watch the whole thing, but they're just a very impressive company. They're continuously operating on all cylinders. They're going to be partnering, most likely at least. They're in talks to partner with Intel and use Intel's foundries. So that's a big boost there for Intel if that happens, considering the fact that Intel mostly lost Apple, and now they're going to pick up Nvidia. So that'll make.
Well, I mean, think about what we covered on the last show, in the big huge production plants that Intel is building around the world right now and using those governments' money. So that's a good partnership. Yeah, right here in Ohio, Germany, France, Italy. I mean, they're taking away. So sorry, I didn't mean to interrupt you. I apologize for that, but they're taking away like this whole supply chain problem, and Intel is building plants in the countries that actually use a majority of their chips, and they're building it right next to where it is. So in Germany, they're building it right next to all the automakers. In the United States, they're building a plant that's really close to some of the supply chain movements around here. It's a smart move by them, and last week I said Nvidia is making a move in this as well. Here comes the announcement, Nvidia and Intel have the partnership.
Nvidia is a play on almost everything big that's happening in the economy right now, whether it's metaverse, self-driving vehicles, the omniverse and retail, omni-channel stuff, all that. It's a big player everywhere, and they make the most powerful computers in the world, and they solve a lot of problems for a lot of industries. So I think, it's a long-term hold here for sure. In my opinion, you can trade it if you want to, but I put this in the same category as Apple, and you probably want to hold it rather than trade it. I just keep it in my portfolio.
Apple had a good run today too, as well.
Yeah, it's been a good run for Apple. They're back near their 52-week, all-time highs actually again. And we knew they would hold up in inflation because they just continuously stack the cash. They can name their own price on things, and people feel like they need Apple because Apple has branded themselves very well, and they've made themselves a very sticky product. So you buy an Apple, you got a cell phone, you got all your photos in the cloud, you've got all of your books and the iBooks app, all your podcasts, everything is in the iCloud. And it's very hard to switch over, and most people really don't want to anyways once they get to Apple. I know, Dave, you're a little bit different here.
Yes, I am. I'm Samsung, but I will say from a stepping back and looking at this from an outside perspective, from just a stock and investment, they did announce today that they're looking at a leasing program where you can pay a monthly fee and lease all kinds of different products from Apple.
Yeah.
So that's a new program they're going to be running out there for people who just can't afford all these other products. But that also makes me concerned about the U.S. consumer. Why are we not being able to afford all these other products? We need a leasing program.
Yep. I agree.
Anyways, those are my 2 quick points I wanted to make out, and just say thank you to all the listeners who are listening right now. And now we hand it over to Brandon. Brandon, what do you have for us? Give us the meat.
Speaking of Apple, my favorite stock, Berkshire Hathaway, of course, owns some of Apple. Back on November 13th, our winners and losers in the coming economic environment. I mentioned Alleghany. I'm probably not pronouncing it right.
Yeah, I think it's Alleghany.
Alleghany. And the quote here was, I love my Berkshire Hathaway, and I like a little known insurance conglomerate called Alleghany that trades under the simple ticker symbol Y. Alleghany trades just above its book value currently. That's where it was. It was just above that one. There's low volume, so it was important to buy with a limit order, I said. So you don't wind up executing a market order that's above its current value if you buy the stock. And I said this, side note, the CEO is a Buffettologist, and that also writes insightful shareholder letters that are much worth reading. And I said, did not expect quarterly earnings conference calls. As I said, the CEO is a Buffettologist. I rang that home, pushed it, that he was a Warren Buffett follower. His name is Joseph Brandon. He worked for Berkshire Hathaway for a few years. And so it came as no surprise to me on March 21st, when Berkshire Hathaway announced that they are going to acquire Alleghany Corporation for $848.02 per share. This was an $11.6 billion transaction, the first acquisition for Berkshire Hathaway since Precision Cast Parts in 2016. And by the way, that $11.6 billion seems like it's a big figure, but Berkshire Hathaway still has around $133 billion in free cash. Alleghany jumped 24% on that day on the news. And here's why this is bullish for Berkshire, because Berkshire has been moving up, creating all-time highs, new all-time highs since then. Alleghany finished in 2021 with an investment portfolio of $21 billion. $17 billion was fixed income. Buffett is essentially paying $11.6 billion for $21 billion. This adds a lot to the book value of Berkshire, but to be fair, after the math is done, I read this in an article that I thought this was kind of funny, because they said this will only add around an estimated 2% to Berkshire's return on invested capital. That's $769 million. So that's nothing. It's nothing to sneeze at, but it is only 2%. So
I would take that kind of return yearly any day.
Yeah. So you're paying $11.6 billion for a portfolio that's worth $21 billion. I think that's a good deal.
Yep. And you're pulling in an extra $786 million a year.
And it's a little known company. They operate very well. They have a lot. They've got a good return on invested capital themselves. They've got a good return on equity for themselves as well. They just don't move like Berkshire. They don't move like the big stocks because they're less known. You know, the portfolio has not been full of losing investments. In 2012, Alleghany purchased TransRe, which is a reinsurance company. They purchased it for $3.5 billion. They've since seen a return on that investment of 119%. The money generated by the reinsurance operations has then been invested in operating companies. This segment is called Alleghany Capital, and it consists of 8 non-financial businesses. In 2021, this segment had a return on equity of 12.3%. So they're doing pretty well. They will continue to operate as an independent subsidiary of Berkshire Hathaway, to continue to operate the same way they've been operating, just under Berkshire now. So they'll continue to keep the same name, like Geico kept Geico as a name. It's a new subsidiary. Go ahead, Dave.
Yeah, I just want to say, man, I wished, I really do, and this is something I want to talk to, like, the people listening. I wish American people ran their financial homes like Alleghany runs his business here, because it takes the profit it makes in, it reinvested in financial assets and gets a return on the money while they're continuing to bring money in. I mean, that's what we all should be doing with our financial homes. I just want to put that out there. I mean, that's the company is sounding very, very well put together, but continue, please.
So here's a few eyebrow raising things about this acquisition. I don't think that it's nothing bad, but Joseph Brandon, he became CEO back in December of 2021. So not that long ago, 3 months. 3 months, he agrees to an acquisition from Warren Buffett. And this is somebody that used to work at Berkshire Hathaway, who's been close friends with Warren Buffett for a very long time. So part of me starts to think maybe Joseph Brandon becomes a potential successor to Buffett or Munger when they decide to step down. Now, so far, the list of successors looks like this. Greg Abel, he currently runs all of the non-insurance operations of Berkshire Hathaway. Buffett confirmed to CNBC that Mr. Abel was the current pick at the time. This was last year. He said the directors are in agreement that if something were to happen tonight, it would be Greg who'd take over tomorrow morning. And then he said that if something were to happen to Greg, then Vice Chairman Ajit Jain, who runs the insurance operations, that he would take over. But I think Joseph Brandon might be added to this list. Either way, they are adding another leader to Berkshire Hathaway that fits well in with the culture that Charlie Munger and Warren Buffett have created.
I also you left out the other person in an interview recently. He said Brandon Beaver of Chinchilla Picking will be added to that list.
I had a mind melt with him. I picked Restoration Hardware. He had picked Restoration Hardware. I called Alleghany of buy, and then he comes and buys the entire business.
There you go. See, I'm telling you guys are right in sync.
Warren Buffett said this. He said, Berkshire will be the perfect permanent home for Alleghany, a company that I have closely observed for over 60 years. Think of this for a second. Who else does this? What others, even CEO, watches a company for 60 years waiting for the right opportunity to buy it? 60 years. That kind of patience is crazy. He said throughout 85 years, the Kirby family has created a business that has many similarities to Berkshire Hathaway. I am particularly delighted that I once again worked together with my longtime friend, Joe Brandon. 60 years. He's been watching the company for 60 years and pulls the trigger now. Alleghany is trading almost equal to the price of the buyout, meaning investors now do not see much of a need for a risk premium here. And there's two reasons why. Both parties say this deal is certain. And to ensure fairness to Alleghany shareholders, the deal terms allow for a 25-day go shop period. So if Alleghany finds a better deal, if the shareholders find a better deal, it won't owe Berkshire a breakup fee. And if Alleghany shareholders decide to take a deal from another company as a buyout, it can take it without a penalty. So either they're going to get the 848.02 or they're going to get something better.
Right. I mean, it's a win-win for Alleghany. And there's a lot of, I mean, there are a handful of companies out there that Alleghany would fit into, such as like a Goldman Sachs or something like that, but I don't see them wanting to make an offer against Buffett because he'll just pump up that price a little bit more and outbid them.
Yeah. One of the
especially if you wait that long to go ahead and pull the trigger, you're not going to let it go.
One of the other companies that's considered sort of a mini Berkshire Hathaway, it's Markle. And that's one of the names that's been thrown out there, but they're even saying that's unlikely. So I still think this is going to Buffett. If you think that your company is going to run better under the Oracle of Omaha, and what company wouldn't, then it's kind of hard to pass that up. So just a little bit about Alleghany here. They own operating subsidiaries, and they manage investments anchored by a core position in property and casualty reinsurance and insurance. Alleghany's property and casualty subsidiaries include Transatlantic Holdings, Global Reinsurers, RSUI Group Inc., which underwrites wholesale specialty insurance coverages, and Cap Specialty Inc., an underwriter of specialty casualty and surety insurance coverages. That's a lot of words. Alleghany Capital Corporation owns and supports a diverse portfolio, as I said, of 8-9 non-financial businesses. Wow, I'm gonna have to edit a lot there. But yeah, so I'm bullish on this for sure. I think that it's going to add a lot to Berkshire Hathaway. I think it's a great fit for the company, and I was really happy that day that I woke up and saw that.
I bet you were, man.
Surprised me, but
kind of,
24%
I mean,
one day. It was a good day.
I always get on the show and I always say, Brandon is the Al Michaels and I'm just the laughable John Madden over here calling day trades. And, he does all this research and really digs into these things. And you find, really interesting viewpoints and tiny details that anybody else would miss. And it really is a attribute to you that, you get on this show and you make calls, and then Warren Buffett does the same thing a couple of weeks later. And I don't know if he's listening to us saying, what would Brandon do? But it seems like that's the pattern lately. You're right. But it really is a credit to you and all the research you put into all these ideas. I'm just over here saying, if the stock is down, you buy it, it goes up, you sell it, and you're over here with the nice details and research. So
thanks. Not always right, but often right, hopefully, and right more than wrong.
I tell you what, are you still holding? Because I want to bring this up. Are you done with Alleghany, by the way?
Yeah, I'm done with Alleghany.
Okay, I want to bring this up. Are you still holding any of the Chinese stocks, such as Alibaba or such? And the reason I bring this up is because of what happened last week with the news about China, and they're loosening some of the restrictions on these companies, and the companies took a jump up because of that. Alibaba was one of them that took a jump up amongst the others as well.
So no, and I'm I alluded this to a little bit on our 1 year anniversary podcast we did a couple weeks ago. Alibaba was a big loss for me, unfortunately. Baidu and Tencent, I was near even. I think on Tencent I was a little bit above, and I got lucky because I was able to catch relief rallies. And I still thought Tencent was the most safe bet because it's already a pink sheet. Nobody seems to care. It didn't get delisted, but it trades the same way that a delisted company would on the pink sheets. Like I said, nobody seems to care about that, like they did about Didi. The reason why I sold here is because I started to see the potential for them to go to zero, and I still think that exists. And part of me wonders if you've got the Beijing stock market that's going to open up sometime soon. That may be the reason why China is loosening those restrictions and trying to bring the value back up on those stocks again. It's been recently reported by the SEC. They passed that law in Congress that the American stock regulators would have to open up the books of the Chinese ADRs and investigate it, and that these companies were going to have to comply. And so far, there is no compliance, which means if that continues, they're going to get delisted. And so, I just, at this moment in time, the political pressure became too much for me to comfortably hold these. And I took my opportunities to get out. And it's sad. It sucks because these are great companies that their earnings, despite the regulations, the earnings have still been pretty good.
Yeah. If the Chinese government could get out of their way, these companies would just completely, skyrocket and compete with Amazon. Like Alibaba could compete with Amazon.
If there were no politics involved whatsoever, they would be incredible values, And then you talk about the problems. Well, it's an ADR. It's a VIE kind of structure where you don't really directly own the shares, but if you're an Alibaba shareholder, you still get to vote. So you still have all the shareholder rights that everybody else does. So it's virtually the same thing, in my opinion. It's just that the fact that it might be delisted, it's a little bit of a scary thought. So
I just wanted to get your thoughts on that because I know for a period there you're really big into China and you were talking about China all the time.
Yeah.
And
now
all
you've got
the stocks and the companies.
Russia situation, and China flew their, an Air Force jet over Taiwan, and I just don't want to be involved in any of that right now, unless I'm in Lockheed Martin, which I no longer am because I took a 30% gain on it.
30% gain, dude. I would be ecstatic to take that.
I was ecstatic to take it. I just hated the circumstances that it came under.
Right.
Because I was trying to protect my portfolio from a Russian invasion of Ukraine, and it wound up playing out. I'd much rather not have any unnecessary casualties. It's a sad situation.
Very sad situation. I hate to just move on just like that, but let's move on. What are you looking at going into this next week? Is there anything on your hit list here? I know the only thing coming out tomorrow that's really big is the consumer sentiment, and then pending home sales. But anything that's really going to be driving, like what I know, because here's the reason I bring this up. CNBC and Bloomberg both asked their analysts, what do you think is going to drive the markets over the next 6 months to a year?
This probably won't drive the markets, but it's on my radar. RH reports earnings on March 29th, and I think it's got a great setup going into earnings. I think it's drastically undervalued, and I'm still holding on to it, and I still really like the company.
Okay. Reservation Hardware. Still a buy and a hold for you, man. But given the choice, I want to ask you this. Given the choice, would you say it's going to be the Fed with rates decisions and government holdings, or is it going to be commodities? Is it going to be the geopolitical events of the world? What's going to move the markets the most?
Commodities will move the market the most because they have the ability to go higher than what everybody else expects. Jerome Powell came out and said that inflation is too high, but that's no surprise to the market. They've mentioned potentially 7 rate hikes. That's the plan of the Fed. That's no surprise to the market. In fact, I think the market might actually now react positively to the fact that the Federal Reserve is focusing on inflation, because if they do that, and if they're able to get inflation under control, then they'll get the price of oil under control as well.
Yeah, I disagree. They won't. Not with what the Fed can do. No, because there's more to oil than what the Fed can do.
They'll put a lid on it. If the U.S. dollar can stop dropping in value, then that will put a lid on the price of oil.
I still disagree with you, even with that prefaces. And the reason is if you look, all right, so you know me, every week I'm glad we started this discussion here. Every week I look at the petroleum count. I look at the rig counts. I look at the how many inventories we have, right? The crude inventories. And every week for the past few weeks, it's been our inventories have been dropping, dude. Our inventories are getting lower and lower, and we are currently at a 91% production rate. So there's not much more we can do to add to it. That means that, as inventories go down and the supply goes down, demand stays the same, prices go up. That's the basics of how it works. It doesn't matter what the Fed does to the US dollar.
Well, you know what? It does matter. Maybe it doesn't matter as much what, is going on in Saudi Arabia does, or what's going on in Ukraine does. Those things are much bigger picture situations when it comes to oil. But
now, hold up.
There's an inverse relationship between the US dollar and oil that is directly correlated, and that the world uses the US dollar to purchase oil. And so the less of a value the US dollar has, the more expensive oil becomes. So if we're able to get that under control, it'll help a little bit. But, oil may still continue to go higher regardless. It just may not go higher as fast.
All right. So yeah, I'll give you that. A lot of people don't realize what's going on in Saudi Arabia. I know you and I have talked about this outside of this podcast, but what's going on in Saudi Arabia, if you may have missed it, there was a couple news articles that came out saying that Saudi Arabia is letting everyone know that they are not responsible for not being able to keep up with the production of oil from their country. They're blaming it on Houthi rebels disrupting their not refineries, but their production plants out there in Saudi Arabia and in Yemen. And they're saying that those are the reasons why they can't hit production goals this year. And it's that's just to let you guys know what's going on in Saudi Arabia. So with that going on in Saudi Arabia and what's going on in Russia, that creates this huge crunch on oil and where to get it. And that's what Brandon and I are talking about right now. So Brandon, back to the discussion. Yes, it will soften the rise, but I still believe there's going to be a rise until both of these events are dealt with and solved in one way or another, man. And we could go into the political aspect of, do we help Saudi Arabia? They're considered our ally, because after the Iraq War of 1991, they became our ally. And now it's like, do we go in there and help them and restore back their oil production plants, or do we stay out of that and focus on the Ukraine, Russia? I mean, there's too many questions to go unanswered, and we're not going to get any answers to that. So I have to trade oil based off of us doing nothing and accepting the current situation. So if I do that, you're a buyer of oil stocks right now.
And
I'm not.
who else trades oil is Goldman Sachs and JP Morgan, and the increase of the price of oil, as long as it doesn't cause a recession, should help them.
It should. And I mean, Warren Buffett bought Occidental, and not bought the company, but bought a big portion of the company. And it was funny because he bought it from Carl Icahn. And to me, that I was like, whoa, why is Icahn selling this and getting out? But yet Buffett's buying his stake. That was kind of shocking to me when I read that article.
Well, it turned out that Warren Buffett had a bunch of warrants and options to buy it at a much lower price, and he cashed in on it, and he's receiving a ton of benefits and special dividends from Occidental Petroleum as well. So, you mentioned that Warren Buffett always has an angle.
Yes.
That was it.
That was it. And it's going to continue. Like I said, I don't see a reason why these oil companies wouldn't go a little bit higher. Would I go on the show and recommend buying an oil company right now? My answer is no. And that's just because of, again, I'm going off the headlines right now, the macro events of the day. People are saying Ukraine is taking back territory from Russia. That tells me that this war is going to come to an end very, very soon. And then people's attentions will be placed in all kinds of other areas, such as Saudi Arabia and the oil production and Houthi rebels and what's going on there as well. So that, I see that these oil's volatility is short term, meaning three months range. As someone who watches oil, I know there's just oil. If you look at it from strictly a fundamental standpoint right now, supply, demand, fundamental microeconomics, it's going to go higher.
Mm-hmm. You've got all the macroeconomic situations. You've got the decline of COVID. So people are still going to want to travel anyways. That's all going to drive the price up.
Yeah. It's going to go higher. That means oil companies going to make more money, and that's just the way it is right now. There's nothing we can do at the moment to currently stop it for the, immediate future.
But as far as market drivers go, that's going to be it, in my opinion. It'll be oil and the rest of the commodities. I'm not certain that the Fed raising interest rates it'll have a market impact, and the fact that the high flying growth stocks that have been hit harder are probably going to continue to be volatile for the rest of the year. But I'm sitting here now, I'm looking at the 10-year interest rate, which is what usually puts a lid on those things. We've moved around 30 basis points, and we're starting to recover from the bear market that we were in. And, stocks for the past week have been great. The returns have been great for the past week, despite that move in that 10-year. A lot of people have been asking the question, can the NASDAQ move higher without those tech stocks? No, because the NASDAQ is, mostly those tech stocks. The S&P 500 and the Dow can, because the stocks that have been lagging for the past 12 years have been the financials. And if interest rates start to tick up and continuously go up without the yield curve flattening, the financials should pick up that slack, which is why I'm in Berkshire and why I'm in Goldman Sachs.
Look at you, man. Berkshire and Goldman Sachs, man.
I'm sitting on a 30% gain on Berkshire right now, and I'm not budging.
Well, I mean, they had like a $525,000 for a share. How many shares do you own, by the way? I'm joking. I'm joking. I'm joking.
I own Class B, so I didn't go that big with it. But
Nice. So talking about NASDAQ and technology, I want to move here to Tesla. This is your white whale, but you actually got it right last time. I mean, you called it going down, but then it bounced back up. Is this because of the plant they're building in Germany and they're adding to the supply chain of EV vehicles in Europe? Or is this just because of people reinvesting money back in the economy because they think the economy is going back up and Tesla's just a name that everybody knows?
yeah, everything in the high growth category got beat down. Even the stuff that really didn't deserve it. Even the companies that have earnings got beat down. So that's probably part of it. And it's probably also that the Germany situation as well. I really honestly, I'm just biding my time until these meme stocks become penny stocks again. It's going to happen at some point.
Now, hold on. Are you calling Tesla a meme stock? Because I disagree. Tesla's not a meme stock.
No,
AMC is a meme stock. GameStop's a meme stock.
No, I transitioned and do it very horribly.
Yeah, very horrible, because I wanted to verify and clarify that really quickly.
I mentioned high flying growth stocks and ones that do deserve to get beat down, and GameStop and those other GameStop and Bed Bath and Beyond have been treated like high flying growth stocks, and they're not that. And the apes, they've got a world of pain coming. And
they already had a world of pain recently. I mean, AMC went down all the way to 15.
Yeah, it's going to get worse. It's going to get worse. So GameStop is still above $100. I think.
Well, Brandon. All right. So we want to transition away from Tesla. We'll come back to Tesla next week, I guess, because there is some things I wanted to point out, but we'll head to the meme stocks here real quick. The problem with the meme stocks is the people who got into them were retail traders. A lot of them were starting off first time trading, and they had a little bit of money to play with, not a whole lot. So they put their money in, they put it to work. And the problem is they don't have any more to put in. And so they're sitting there either holding, or they took the money out, took a loss, and said, you can't win a stock and trading and investing. And those are the two scenarios that you have. They either took a huge loss and got out, or they just don't have any more money to put in, or they're putting in $20 a paycheck, trying to buy a share at a time to move it up.
Let's make it very simple. And I've been saying this since probably September of last year. Do not buy a company in this environment that does not have positive earnings.
Now, there's new startups. New startups don't always have positive earnings in their first few years because of growth, and they're trying to expand, and they're taking their profits and they're reinvesting it in this constant growth.
In this environment with the Federal Reserve raising rates, it's going to be a very tough environment for even stocks like that. I wonder, I don't think that the Federal Reserve raising rates is going to have much of an impact on companies that have positive earnings, but the ones that don't, that's going to be tough. It's going to be tough to see the risk reward probably for the next 2 years in those companies, I think.
Do you have an example of a company that doesn't have positive earnings that you would stay away from completely, besides Robinhood
or GameStop or Bed Bath & Beyond,
yeah,
or AMC? Off the top of my head, no. but I think those are all really good examples.
Those are all good examples. Yes.
If you pull up your Robinhood and you look at the price to earnings ratio and there's nothing there, then you probably shouldn't buy it right now.
Yep. And just because I know we have a listener right now who reached out to me, and they're not new to stock trading. They're in that they're moving past that first stage, moving to the second stage of learning how to trade and invest correctly. And they wanted to get rid of the Robinhood account. So they asked what was a good trading platform to move on from that basic Robinhood. And I did recommend TD Ameritrade Fidelity, because I said, Robinhood, there's a chance that Robinhood could not be here in the future. And you don't want to leave your money in a company that may not be around.
Exactly. I wouldn't touch it. I pulled all my money out of Robinhood last year. I don't trust them with my money. I wouldn't buy the stock. It's very disappointing. Very disappointing situation with Robinhood. They'll be one of the first to go if we have a recession, I think.
Yeah, and what's disappointing about it is because they helped this retail trade and expansion and growth into the market, and I was excited about too. Like, hey, everybody's taking control of their future and taking control of their investments and retirement for themselves. And then to come to find out that Robin is just not well run at all, and it's not a good financially sound company for being a financial company.
No, not at all. It's when everybody else is doing what you do that made you famous and they're doing it better now. Yeah. Not good.
Final thought, man. Final thought. Do you have one?
Just going back to not buying anything that doesn't have a price to earnings ratio. You can make some exceptions to every rule. I think the airlines might be in there, like Delta Airlines, best of breed airline there. Still long Restoration Hardware, still long Berkshire, and you will have to pry it from my cold dead hands because they have a successor plan, Warren Buffett and Charlie Munger. I think, honestly, this is sad, but I think their age kind of keeps a cap on Berkshire Hathaway right now. It's trading at a price to earnings ratio at around 9, and we're hitting all-time highs.
Yeah. Yeah, so it's got some track there to run on. Yeah. Final thought from me, guys, is we covered a lot of different stocks here. We spent about 5 minutes on each one. Listen to it again if you didn't catch it all the first time around, because we want you to take all this information in. Go ahead.
One more thing on the same episode. I think it was either the same episode or maybe 1 week before or after. I said buy Activision Blizzard, and we both agreed on that. Then Microsoft decided to come out and buy the whole business.
Right. There you go. Yeah. Brandon's got the pulse. Let me know what Carl Icon's buying next. So KULR, one I'm still long in, Nvidia I'm still long in, Intel I'm still long in, but I'm looking at all kinds of things right now. Oil companies going up and down. I did post on the Instagram about looking for an opportunity to get into Blink. Blink did drop after I posted about that, and they went back up again today. Blink is a play on the EV. Everybody's talking EV. We got to have EV. We got to have EV. So it means you got to have Blink. Yeah. All right. Is Blink going back up to 40 where it was before? Maybe. Will it go back up to right now? Not if the overall market takes a drop. So that's why I said you got to look for opportunities to get into Blink, but be patient. Don't just rush in just because it dropped 10 cents a share. Be patient. Wait for actual opportunities to get in. And I may be wrong, and it may go straight up to 40 for all I know. I'm not 100% right on this, but if everybody is going to move forcefully into EVs and push everybody into that way, Blink is definitely going to be a winner of that.
Yeah, and the other thing, the market unfortunately is often run by computers, and so one way that you could play this acquisition of Alleghany, other than just buying Berkshire Class B or Class A, whatever you can afford, is watching Alleghany. And if that stock, they're going to purchase it for $848.02, I said. And if the stock drops because computers start selling it on a bad day, and you can get a 5 to 6% premium on it, why not take it?
There you go, man.
Because you're guaranteed that 848.02. You're either going to get 848.02 or you're going to get higher. So why not?
Why not? Brandon's done that move before. It works every time. All right, guys. Before we go, Brandon can't say Alleghany. But as always, it's your channel pick. We hope you've been entertaining, educational, and uplifting, because we want everyone to make money. Have a good night.
Have a good night.